Hi there, everyone. Welcome to today's webinar on WOTC, the Work Opportunity Tax Credit. I appreciate you being here and taking a bit of your Friday to join us and learn more about this great opportunity for all of our clients. I will be hosting in the sense that I'm watching the chat window and will be relaying those questions to our presenter, John. But at this time, I want to turn it over to him so that he can really take you through what the Work Opportunity Tax Credit is, what it offers to our PayFocus and PayFocus Pro users, and what we have available to them through the Talent Focus platform. This is really a continuation of an earlier conversation that we've had about Talent Focus. If you have questions about how to access Talent Focus or Talent Focus specific questions, we can kind of regroup at the end, but today we're really going to focus on how WOTC plays a part in that bigger platform. So I'm going to send that over to John and give him an opportunity to go ahead. You might have to take yourself off mute, John.
How about now?
Yep, that's perfect.
Okay, great.
Thanks.
Yeah, not a problem. So just to kind of review, the Work Opportunity Tax Credit is a program that's been around since 1996. Okay? It is a fantastic program, and a lot of businesses are not aware of this. And what it is the Work Opportunity Tax Credit is just that. It is a tax credit. In the accounting world, we like to call it an above-the-line benefit. So that being said, what that really means is it's not a deduction. It actually is a dollar-for-dollar offset of a business's federal income taxes. So when we're talking about the Work Opportunity Tax Credit, and this is very important when you're out there talking with employers, is to make sure there's not a confusion between the fact that this is an income tax credit and has nothing really to do with their payroll taxes. Okay, this is a federal income tax credit. It's a dollar-for-dollar offset of their federal tax liability. And how it works is you as the employer receive tax credits if you hire individuals, okay, that meet certain criteria. All right? And the way the IRS deems this is if you're hiring individuals that they call face a barrier to employment is the actual words the IRS uses. And it boils down to a few small things, okay? Veterans, okay? Those living in low-income areas or disadvantaged areas, rural renewal counties, food stamp recipients. Remember, about 56 million Americans are on food stamps right now. Those on welfare, ex-felons, and long-term unemployed. Okay, so if a business hires one of these individuals, they can receive a tax credit, okay, for hiring them. All right. The government doesn't just want you to hire them, they want you to retain them. So the longer the employee works, the more in credit the employer earns. So it is something where we want to make sure that individuals don't just hire these people, but they retain them. So the longer they work, the more in the credit will earn. On average, about 1 out of 5 individuals a business turns around and hires will typically be eligible. Okay, and these tax credits can be substantial, but historically the application process is time-consuming and complicated for business owners. All right, and if we're really looking at what a business owner does, it's just that he owns a business and they work on running their business and doing their day-to-day tasks. They don't have time to be dealing with a bunch of different paperwork that's going to be associated with this program. So the WOTC and Talent Focus. So Talent Focus simplifies and automates the process, making it very easy to identify and apply for these valuable tax credits. So when we're talking about these businesses, okay, a lot of them, their hesitation is just that, it historically has been a paper process, it's cumbersome, and it's a lot of work. But what we've really done with the Talent Focus system is set it up so we're leveraging that technology to make it a very simple process, and it's integrated right into the Talent Focus dashboard. It's automated. You identify the eligible applicants when they're applying, okay? The paperwork and processing is all done electronically. So all their signatures are collected electronically. It's all done that way. And then the year-end tax package and the forms are available and ready for filing. So you only pay for the tax credits that are awarded Talent Focus refunds if the tax credit is denied. So this Work Opportunity Tax Credit, it's a federal income tax credit, but it's administered by each state's Department of Labor. So we submit the paperwork to each state, okay, and then the state turns around and will issue a certification indicating that you can actually take the tax credit. So what ends up happening is we ask questions to determine if someone's eligible. We submit those answers, and the state comes back and says yay or nay. So if the state comes back and says denies those, we will turn around and refund the applicant their money. This is fantastic for networking and referrals in the accounting community. A lot of tax preparers don't want to get involved with this, okay? Because of all the paperwork that's done, you know, the amount of time they'd spend on it isn't worth it for all the hours they charge and the fees they charge. So when you have a system like Talent Focus that's set up to do this automatically, they're all ears because it means they don't have to do much work, and we're going to do all the work for them. The other thing, you're out there talking with businesses that might have a net operating loss, okay? These credits can carry forward up to 20 years, okay? So they go back 1 year and up to 20 years.
John, we had a question about billing. So if we could just say once again when a client is billed and what are they billed for? So if they're having to pay a fee, what is that fee?
Sure, that's a great question. So the Work Opportunity Tax Credit will go ahead and bill the employer, okay, a fee of $299 when we apply for the tax credit. And then, like we said, if the credit is denied, we'll refund their money. So when they apply, we turn around and charge their account. The billing is all done through credit card right through the system. So in Talent Focus, the employer will go ahead and set up a credit card on file, and then when we go ahead and submit the forms, we will charge the client. And then obviously if the client does not reach 120 hours or is not certified, we will turn around and refund that money.
Awesome, thank you.
You're welcome. Next, overcoming obstacles. So, this concept of the work opportunity tax credit is new to a lot of people. So oftentimes there is this program, like I said, has been around since 1996. A lot of businesses haven't heard of it because, one, it's not being pushed by their CPA or accountant because of all the work involved. Okay. So, two, there is a lot of paperwork involved, so people kind of steer away from it. But like I said, we leverage technology. So often because people are very skeptical because they haven't heard about it, they always think this is too good to be true. So we do hear a lot of objections to this. And when you talk about this, the 9 different categories, okay, of those on food stamps, SSI, welfare, vocational rehabilitation referrals, long-term unemployed, convicted felons, veterans, you often hear from people, oh, we don't hire those type of people. Well, in all reality, okay, 56 million Americans are on food stamps right now, okay? When you're sitting in an interview and talking with someone you want to hire them, you look at their resume, you're going to ask them about, their experiences. You're going to ask them about the jobs, their education. I've yet to be in an interview where someone has asked me, oh, do you or your parents are on food stamps? It's not something that's commonly asked in an interview. So when employers say, oh, we don't hire those people, they don't really know, okay? I've been doing this a long time. I did this for, Fortune 50 companies. And, their original thoughts were, hey, we're not going to hire those type of people. Well, in the long run, they did, okay? So even in corporate America, okay, small businesses, we have a couple of doctors' offices, that have 5 or 6 people in them, and they're still hiring individuals. They don't realize it, but they're eligible for the work opportunity tax credit. So when we talk about this, and the individuals say we don't hire those type of people, they really don't know that. The other one is we don't currently have tax liability. As we mentioned, these credits can carry forward up to 20 years. And companies can keep these credits on their books as an asset in a possible sale. So I've seen this a number of different times where, a franchise or a business has grown too fast. So they went out and they, purchased a lot of locations, spent a lot of money, and they don't have tax liability because they're writing off all this money they spent. So they're operating what they call a net operating loss in the accounting world. In most cases, what they do is they continue to do the tax credits, and then they just keep those on their books as an asset. So if, heaven forbid something were to happen, they can turn around and they have these tax credits built up, and they can use those as an asset if they were ever going to sell. So if you ever hear that we don't have tax liability, that's fine. You can carry these as an asset. The other thing is we are a new business. I don't want to put down the $299 and wait a full tax year to take advantage of the credit. Okay. A lot of times businesses will go ahead and pay estimated quarterly tax payments. Okay, so they're going to be paying their, let's reiterate this, they're going to be paying their quarterly income taxes on a quarterly basis. You can apply the credits on those quarterly payments as well. The other one we commonly hear is, oh, I've done this before, and it was a nightmare sending in all the forms and doing all that. Well, again, with the talent focus, everything is automated. Well, we take care of everything right down to the calculations for the Form 5884. So, again, we're going to be doing all the work for them. We really leverage technology, and that's one of the big differentiators for us. Success stories. Let's talk about this. So oftentimes you'll hear from these different companies that they're not sure about this. Again, they're a little bit skeptical. Here we had a 200-employee catering company, okay? The owner wasn't really sure, but finally he was able to let this start to work, and before he knew it, he'd never done the tax credits before, and for his catering company, he received over $92,000 in income tax time. He was very happy about that. The next one is a 100-employee home health care provider. They received $44,000, okay? And this was a situation where they'd done WOTC before using a paper process, and it failed miserably. It took a little bit of time, but we convinced them that this process was going to be very easy for them. And after they saw how we leveraged technology and how easy it was, they were on board, and they saved over $44,000 in tax credits. Next, and I see this all the time, 17 employees. The doctor was emphatic. I'm not going to hire those type of people. I'm not going to do it. None of the people I hire will ever be fit into that WOTC category. Well, they did, and 3 of them did, actually. So just think about a small 17-employee medical office. We don't hire those people, and they did. They hired 3 of them and received over $11,000 in tax credits.
John, really quick, in your experience, have you seen a certain size of company where the WOTC credit really has more of a value? Like, is there a big difference between a company with 5 employees versus 50 employees, or would there be a certain size where you would definitely recommend WOTC?
That's a great question. It's a simple math equation. Okay, on average, about 1 out of 5 people you're going to hire will be eligible. So when you have businesses that have high turnover, typically they're going to be able to get more tax credits. This is really a no-lose situation as far as, hey, you're paying $299 if the people are not certified. Then we turn around and refund the $299. So if you're a small business that hires, 10 people, I think you're going to be just as happy, as in scale as, a 1,000-employee company, that's hiring 400 people. It all boils down to math as far as that goes. So I really don't see a situation where you wouldn't want to do it, no matter what the size of the company. They really have nothing to lose. They're going to go ahead and screen their employees. If they screen their employees and none of them are eligible, that's fine. It really hasn't cost them anything. It doesn't cost them anything until they turn around and hire someone that's eligible.
And this only applies to new hires, right? So it has to be an employee within their first year, or just when they have to file within the first 30 days, right?
That is correct.
Okay.
So it's only available to new hires, and again, we have to have the paperwork submitted within the first 28 days of their start date.
Okay. Okay, perfect. And so each new employee comes in. If we see they're screening for WOTC credits, each of those new employees within the first 28 days, if we file for them, it's $299 per employee, not per filing, correct? So if I filed 5 employees, it would be 5 times $299.
That is correct, yes.
Okay. Awesome. Is there any way to backtrack? So I know here we're about to talk through Talent Focus, but if for whatever reason a new hire comes in and they're not being hired or they're not going through the onboarding process in Talent Focus, can we still submit WOTC through Talent Focus?
Yeah, so under the tax credit tab, there's a place where you can just go ahead and screen employees just for tax credits.
Oh, awesome. Well, sorry to jump the gun a little bit, but
That's all right.
That's definitely where we're headed. So thank you so much.
You're welcome. We'll go ahead and kind of show you as we go through the talent focus demonstration. We'll walk through WOTC and talent focus, how to qualify someone, where you'll be able to see all that, the reports, and what the CPA sees. And kind of before we jump the gun over there, and we're talking about sales and who to target, who doesn't qualify, and tips and tricks for selling. Okay, so when we're talking about this and who to target, okay, so really the companies that do very well with the Work Opportunity Tax Credit are those that have typically are hiring a lot of people and have turnover. So when we're thinking about that, restaurants do very well with it. Manufacturers, okay, so if they have, these frontline workers, that go through and they, have turnover there, they do very well. Home health care does great. They typically have a lot of people that turn over, and as does janitorial. They do very well. So when I look at my clients, when we were doing our tax packages, about a month ago, most of them, typically fell into those categories. Restaurants, home health care, janitorial, manufacturing, and again, spattered throughout there are all sorts of different companies, from doctor's office, little retail shops, from start to finish. Those are, anyone's really eligible, but the ones that to really target are home health care, restaurants, manufacturing, and janitorial. If I were going to focus on those are the ones I would focus on. Who would not qualify? Okay, so let's talk about that. Nonprofits. Okay, so what are we talking about? This is a work opportunity tax credit. Okay, so for nonprofits, they don't have a profit and they're not paying taxes, so it typically wouldn't be someone I'd really talk to about this, is government agencies or nonprofits. Tips and tricks for selling, do keep in mind, okay, I think one of the things you need to do is make sure you're leading with this, okay? What's typically the biggest objection you're getting in your industry is price, okay? So if you could come up to someone and say, hey, we're going to offer all these different things, would you like them? Or would you like them if they were free? And, that's typically going to get a lot of people's attention of, oh, I like it, I can't afford it. Well, what if I found a way for you to afford it? Would it be something you'd be interested in? Well, that's very easy. If we turn around and explain to them that, hey, there's a way to afford it, and it's called the Work Opportunity Tax Credit, it's certainly a great way to lead in with what you're selling. All right, Aubrey, do you want to head over to the demo, and we'll kind of go through that? Perfect.
All right. So here in the Talent Focus platform, we're starting in the dashboard. And so really where we've been focusing up to this point has been in the tax credit section. And so within tax credits, this particular section in Talent Focus, if you have hired someone that has screened, so every applicant in Talent Focus will be screened automatically, but whether or not they then qualify will be up to the government agency that takes care of this for us. But when the client chooses to submit the WOTC application through Talent Focus, this is where they will be selecting within the first 28 days of that new hire's employment to check out, and they'd be paying the $299 for each applicant that they are filing for in the system. So this information and the fee associated with it is just through Talent Focus. It's not necessarily if your CPA looks at this and then files it for you, that would be a fee to your CPA. The $299 is just for filing and tracking in Talent Focus itself. So that was just another question that came up. And then the report section is something that's kind of, if you want to talk through this part, John.
Yeah, sure.
And what we're seeing here.
Yeah, so pretty much what the employers can do is they're going to go ahead and hire these individuals, and then once they're certified, okay, they're going to show up in the reports, okay? So if we go back, Aubrey, can you just click on the Cases tab?
Yep.
Okay, so in here you're going to see, okay, that once we go ahead and submit the orders, all right, the employer's going to have visibility in seeing where we are in the process and when that certification is received. So they'll know, okay, at this point in time we have received the certification. Now if you jump over back to the reports, now once that certification is received, you'll see the employees in here, okay? And then with the payroll information that we get in here, they're going to be able to see, hey, where are we at with this employee? In most cases, you'll see in the green what they've earned so far, and in the orange what they potentially could continue to earn. So remember, for this work opportunity tax credit, the employees have to work. You have 365 days for them to work, earn wages and hours worked, and as they continue to do that, that's how the credits will be calculated. And then finally, if we go to that button on the bottom, the tax package report, this is very important and people love seeing this. So as you'll see there, that 6830, okay, that is what the employer earned in credits. Okay, so it's a nice summary of what they earned. And then if you go to the second page, it's going to be all the supporting documentation that the CPA needs. All right, so this is, we provide all this information, and then the CPA needs to fill out the form 5884. Which is the last page, okay? And so this is a form that, you attach to your tax return. It goes with the form 3800 when a business is doing their taxes. And on that third page, okay, we give them line-by-line instructions, okay? You'll see right there on, hey, for line A, you put 7,800 in 2030. Line B, you put 12,000, 4,800. So we give the CPAs literally line-by-line instructions on how to complete the tax package. All right.
And I think the biggest sell, too, is the fact that this is integrated with the payroll systems. It integrates with both PayFocus and PayFocus Pro, so the employer is already putting in hours, is already putting in wages through the payroll system, so then that will be reflected here and reported if then WOTC is filed as well. So it's all being tracked for you in the manner you're already doing it.
Right. And Aubrey, one quick thing I'd like to show everyone, if you go back to home page, let's go to the employer view.
Oh, employer.
So the back to home page in the top right.
Oh, sorry.
Yeah, there you go. And just go to that job seeker view. Job seeker view. And one of the things, let's click on the phone, because we are seeing about 2 out of 3 individuals utilize a mobile device when they're completing the application. Okay, so if you click on the mobile view, and oftentimes people are like, oh, well, what do the questions look like? So if we click on that phone, we'll kind of go through and take a look at what this process is like from a job seeker's perspective. Okay, so if you click on the click to apply, the employee will go through and apply to a job. So as you go through and click the green button here, it skips to the next page, which is going to show you if the employer the employee uses Indeed, LinkedIn, or Facebook, the applicant's information will flow over. They'll go ahead and complete the application, okay, answer the pre-screening questions, and then finally, okay, is going to be our tax credit assessment, all right? So this is kind of one of the things I wanted to focus on. And so when you look at what some of these are questions, you'll see we'll go through these. You know, have you worked for the employer before? Now, this is important because I often hear this all the time when you're talking to businesses and they talk about, oh, you know, it's only good for new hires. Well, what if I fired all my employees and hired them again? Well, the IRS thought of that as well. So rehires are not eligible. So oftentimes just keep that in mind. If someone's worked for you before, so if we're talking about a seasonal business, and we're kind of getting into that time of year where seasonal business will start up for their summertime, start hiring employees, and if they're bringing people back, do keep in mind that those individuals that they're bringing back typically will not be eligible just for the fact that they've worked for the employer before. The conditional certification from a state workforce agency, oftentimes, you know, people being released from jail, one of the first things they'll do is when they go to meet with their parole officer, is they're going to work with a workforce agency that will help them try to get them assimilated back into society. And one of the first things they're going to do is give them this certification, so when they go out and looking for a job, they can just say right to the employer, oh, hey, check this out. You know, if you hire me, you're going to get, you know, $2,400. Oftentimes, veterans, they'll do the same thing for veterans too. So that pre-conditional certification is something that's given to them if they're already deemed eligible. And then the next one's the temporary assistance for needy families. That's just a very polite way of saying welfare. SSI is someone, obviously, that's receiving supplemental Social Security if they're disabled. And food stamps. That's really the biggest category. When we talk about the work opportunity tax credit, 75% of the people that are eligible are usually under that category. Again, one of the new categories that has come out in the recent years has been this unemployed category. So that's anyone that's been unemployed for the past 27 weeks and has received compensation for that. And then veterans as well. If you hire veterans, there's about 4 different veteran categories. And then if you have been referred by a vocational rehabilitation referral, employment network, or Department of Veteran Affairs, you can receive tax credits as well. And then obviously, if you've been convicted of a felony in the last year, you're eligible, as well as there's certain rural renewal counties throughout the country that if you hire individuals in those, if they live and work in those counties, you can receive tax credits for them as well. So the nice thing about the way our system is set up is, as you can see, it's a couple of quick yes or no questions. The nice thing about it is it's set up in a decision tree format, so if they answer yes to some questions, there will be additional questions asked. So if they answer no, it's usually they're done in about 90 seconds to 2 minutes. If they answer yes, there could be additional questions that might take a little bit longer.
Awesome. That was a lot of good information. We have a couple of questions coming in, so as they come in, I will relay them to you, and we can make sure that we answer those so everybody feels confident in this. Hopefully in the last few weeks that Talent Focus has been live, you've had a chance to at least check it out and feel hopefully a little bit more confident in what it can provide. In the Benefit Mall University LMS, there is a demo guide out, and so I would definitely recommend that as well if you're still looking for a way to incorporate this conversation in your visits with potential clients. John and I are going to stay on the line as long as you need us, but also know that you can reach us at any time. And then this is a great question that came in. Do we have a cheat sheet of all the information about cost and WOTC credit guidelines? We do have quick guides. I believe that they're being housed in Salesforce, but I will verify with marketing on that. Thanks for all of your time today. Thanks for all of your great questions. We'll be here as long as you need us, but if not, you don't need us today, maybe later. Feel free to email and head out when you're ready. Enjoy your Friday. Enjoy your weekend. Thank you so much for your time.
Are we open for questions now?
Yep, absolutely.
So I have a question, Aubrey. So my question is, if they pay the $299 no matter what, why would they ever have the CPA filed anyways? Because they pay the CPA on top of that. They must have Talent Focus do it all. Am I correct?
So there's two options. They're either going to pay and file through Talent Focus, or they're just going to pay their CPA and have their CPA file for them.
But I thought in order to even start the process, you paid the $299 up front. You don't see everything, or is that untrue?
If you're never going to file through Talent Focus, you don't have to pay the $299. Talent Focus will automatically screen all new hires or all potential employees. That screening comes with Talent Focus. The choice then becomes, do I want to pay to file and do it all online, or is this something that I want my CPA to just put their hands on because they're going to be handling everything else anyway?
Hey, John, do you have any idea what the average charge the CPA charges to file the Form 584 and everything? Is it in line with this? I know there's differences with CPAs, but what do you find average charge of CPA charges?
Well, that's the thing is we pretty much pre-populate the 5884. So CPAs again are going to charge, their typical hourly rate to file it. If we're doing all that work, it's going to be really easy for them. They'll probably just spend an hour or so just reviewing, the information that we sent over and confirming, what they see. But again, it's very minimal because most of the information we've done and all they do is take the numbers and put it right in the form. CPAs typically don't want to have anything to do with submitting on a weekly basis, submitting those 8850 and 9061 forms.
Yeah.
So even if they see the response that someone's eligible, we ask those questions in our system that makes it really easy. If they were to turn around and look at the actual forms they had to submit, and then go back to the employee and say, oh, hey, you need to fill this out. It's kind of eliminating the process, and you're really creating more work. Very rarely do I ever see CPAs want to get involved in submitting all of the, daily paperwork. And oftentimes, the employee will answer the question in our system, and then when they go to have them fill out the form themselves, the answers are different. Because of the way you obviously saw how easy the way we asked our questions. It's very easy. If you look at the 8850 form, it's pretty confusing. So that's part of
no, I get it.
Why the system's.
Yeah, this is overwhelming right now. So they have to do, how often do they fill out the 2848? Is it like every month or something, or how often do they do that?
No, that's just, the 5884 is submitted once a year.
No, what about the 2848?
The 2848, what that actually is that is a limited power of attorney that allows us to work on behalf of the employer. So if they have veterans, okay, that, every veteran has a DD-214, that's their release notice. Convicted felons also get a release notice when they're out. So when they're filing for this tax credit, the government asks for those. So we'll go back and forth. Also for like the food stamp category, in certain categories, the IRS will come back to us and say, oh, yeah, hey, we need a copy of someone's driver's license or proof of where they live. Well, all we do is when they sign that 2848, that allows us to go behind the scenes, pull that information right out of onboarding and give it to the government. So all it is just a power of attorney that allows us to do all the work behind the scenes for them.
Yeah. So bottom line is I could see no CPAs want to mess with this kind of crap, so they just need to pay the $299 to get it done.
You got it, yeah.
Yeah. What's the form you said they have to fill out consistently through the whole process? What was that called?
The 8850.
And that's how often does that have to be filed?
So that's the 8850 is filed with each individual that's eligible.
Okay. And that's filed up front then?
That is correct, yes.
Okay. Yeah. Aubrey, I think we're going to need like a one-page cheat sheet. I agree with whoever said that's brilliant. There's a lot of information, a lot of power here, but this is a lot to take in a half hour.
Yeah, absolutely. And so the type of cheat sheet we're looking for, do you find that would be just something to help you explain behind the scenes, or is this something client-facing so that everyone can be on the same page, or a little bit of both?
I think it's we could client facing if we could have it. We could just hand it out to them and say, hey, here it is. It just outlines like how Talent Focus uncovers these people, all the different forms that have to be filed, who's eligible. Like just say, here's what needs. Basically, here's how it works. Who's eligible for this, and then what forms need to be filed, and then about like the credits or something like that is broken up into sections, and then we could talk through it. That'd be awesome.
Yeah, absolutely.
Because I don't think anyone's going to know this well enough. All I could say right now is I get a little bit. I learned a ton today. But what it made me realize is I just don't know very much. I know I can get up to $9,600 of federal tax credit. I also know there's a Form 5884 that has to be filed, with your tax return. I also know there's a Form 8850 that needs to be filed up front. But I think if we could just a little more that would help us out there, that'd be great.
Yeah, absolutely. So give me a little bit of time for a turnaround and then get it approved. But I 100% agree. And I really like the idea of making it client-facing, where it's something that you can have for your information, but also you could leave with a client, because if this is a lot for us, imagine somebody who's also running a business. So 100% agree.
No, and I think it would also be great. I don't mean to give you more work to do, but I think like the recruiting I know you're like, oh shit, John. I'm sorry, I said a bad word. But I meant like the recruiting aspect too would be great too. How you post jobs and everything, that cheat sheet, how that works too. Those two things.
Yeah, absolutely.
Because this stuff is great. It's just so overwhelming. There's just so much for us to learn right now.
Mhm. And it just keeps coming. So definitely keep an eye out for that, and once we can nail that down, then we'll definitely put it in a couple different places to make it easy for you to access.
Okay, that's great. This is really, really good, you guys.
Awesome. Just one more clarification. It is $299 per person.
Uh-huh.
So I know this number it looks like this is what we're paying, but when we go to check out, it will tell us it's $299 per how many applications. Per application, yeah.
And that's per person, basically.
Yeah, per person. This is just a demo, so it didn't update. Yeah, absolutely.
So John, I have one more question, and I promise no more questions. So, John, let's say someone gets $9,600 of tax credits. What is that in real life savings to a person, average to a business? I know every business is different, but what would you say a roundabout number that is in tax dollar savings? Are they usually at a threshold of 30%?
Well, I'm a little. So it's really going to depend on the business and how much money they're making. But if you just think of it in a typical business, let's say for example that has $500,000 in revenue, and after their expenses, they have $1,000 in tax or $100,000 in tax liability. If they have, a couple of those 9,600s, so let's say they have about $20,000 in tax credits, then they only end up paying, about $80,000 in taxes. So it really depends on the size of the business and how relevant that amount is. For a small business, that doesn't make a lot of money, and they hire a veteran that's eligible for $9,600, that could be huge for them.
So when you say, that's not part I'm confused on, when you say tax credits, you're saying those are actual tax credits or just lowers their tax liability?
I got a question whenever you get time, thanks.
Okay.
Yeah, it's a tax credit. It's an above-the-line benefit. So if it's not a reduction of,
I didn't know that.
It's a dollar-for-dollar offset of what you owe in taxes.
I'm done asking questions. I've asked all my questions. Sorry. I've hogged up everything.
Sure.
You're okay. Questions are good. I have a question from Janelle, and I have a question from James.
Go ahead, Janelle.
Oh, maybe you're on mute.
I'll go.
Janelle, is it working now? Try it one more time.
Can you hear me now?
Yep.
Hello. Okay. I was like, I'm not on mute, but it's not. Okay. Really quick. So I was going to say there is a couple sheets that were sent out, which I don't know if you guys created these. There's a talent focused overview, which already we can send out for pro, and it kind of walks through for external clients. And then there's also the frequently asked questions. But what would be nice in addition to that is maybe like a one-sheeter for when we were out on site, like kind of the benefit statements. Does that make sense? So already we have two sheets that already explain it really well. Mine is just the bullet points of what's in it for a client, minus the money. Like clearly I can tell clients, you can make a bunch of money and earn a bunch of money to offset taxes, but maybe just a couple, like a one-sheeter with bullet points. Because these two sheets are great, and it would explain how it works to a client once they said yes. But like to John's point, if it was one that just said the top 6 benefits to a client. Is that?
Yeah, and it kind of goes to those success stories too. Because you're right, it's money, but it's not just money.
Yeah.
So what are the other benefits? Awesome.
That would be awesome. Okay, great.
Thank you, Janelle. I have a question from James and then Todd.
Can you hear me?
Yep.
Okay, I guess I'm just maybe I'm not understanding, but so if a client, I mean, I'm just assuming 50 and up or a larger opportunity is going to see more benefit out of this. They're probably already going to obviously have a CPA. Why would they choose to use us, or we're going to charge them $299 per applicant when that billable hour the CPA is already going to be doing all of their taxes anyway? Does that make sense? My question makes sense to you?
Yeah, and that's a totally fair question. This is really just built in in the circumstance that you don't have a CPA or you're not going to be utilizing the CPA for this. So this is nice if you're wanting to, because I'm sure a CPA can offer and show you and help you track, but if you wanted to kind of take that on for yourself, you can watch the cases as they're going through the process. And it's also integrated, so it's not a requirement, but I agree. I mean, if you're already using that resource and you're paying that resource, don't feel like it's more money you have to pull out of your pocket.
I'll just speak to that as well. Most CPAs you'll talk to, none of them want to get involved in this. There's too much work for them, and it's not worth their time.
Okay, thanks.
Yeah, but thanks. I hope that helps. Todd? Todd, you may be muted or not connected. Sorry, Todd, we're not able to hear you if you're speaking. Todd, do you happen to know which call-in user you are? Because if you're called in, I went through and I unmuted all of those, so maybe try again. Because there's not a little microphone over your... Oh, is that you?
Hello?
Hello.
Can you hear me?
I sure can. Sorry about that.
I don't know what was happening there. I
think, no, I just think it's had it. It's like, it's Friday. What are you making me do?
I understand.
So, thank you for hanging on in there, Todd.
No, not a problem. I just want, I think I'm going to say the same thing that we've heard from a lot of the other people. So maybe, could I act like I'm a restaurant owner?
Okay.
And I'm here in Maryland, on the eastern shore of Maryland, which is very rural, but we're also very, a lot of resorts. So we're a very seasonal industry.
That sounds lovely.
In the hospitality. Yes, it can be. I did see, and maybe John can answer this, that one of the 9 was summer youth. Can we explain that a little bit?
The summer youth category, where are you seeing that?
Well, when I went on to the state of Maryland, before this, I even knew that we were going to have this training, I tried to do a lot of info myself, learning this WOTC credit, and it was number 6, and they were showing me in that, in Maryland, that they was worth about $1,200, but I didn't understand how it would even get to that, being that if it's a summer youth, they'll probably only work at 90 days, if that.
Yeah, so this is the deal. The summer youth category disappeared in 2015.
Oh, great. Okay.
That's why I was wondering where you saw it from, because the summer youth category, they replaced it with the long-term unemployed.
That's what came up.
Yeah.
Okay. So then my other question. So I'm hiring people. They come in. I'm using Talent Focus. They upload their resume, everything. That's when they're going to, through our Talent Focus, that's where they're going to answer a few questions. And that's what's going to screen them to find out if they're qualified. Is that correct?
That is correct, yes.
Okay. And then when it says that I have, I'm just going to say 7 people or 5 people if it just happened to be that way. It's going to be, and it'll show me the credits. And let's just say of those 7, it came out to $26,000, or let's just say $30,000. I'm thinking. For that, for me being the owner, I'm looking at 7 times 300 for $2,100. It's going to come out of my pocket right away. Is that correct?
That's correct.
And let's just say it was in June or July when my summer's starting. I will not see that credit, of course, or any of those credits until the end of the year. Once we file the was the 5884.
Yeah, so that's a great question, and that's one of the things. One of the objections we had is just that. What the owner can do is, if the owner is paying estimated quarterly taxes, he can go ahead and take the tax credits that he's earned so far, use them against his quarterly tax payments, and then when he files his 5884, he's just going to true that all up. So let's say, for example, for the first couple of months he earns, $4,000 in tax credits. Well, if he's paying, $10,000 a quarter, then he can go ahead and only pay $6,000. And then at the end of the year, he's just going to true everything up.
Okay. Now, again, I probably was on a bad site since it had the summer youth still in it, but in that site they were saying pretty much, I think what you had gone over, that the 3 top categories were veterans, food stamp recipients, and long-term unemployment person that was there. And from that site, I also saw that the veterans were the ones where I guess you could earn up to $9,600 in credit.
That's correct.
Or is that all 3 of those top 3 can happen?
Yes. So the veteran categories are $2,400, $4,800, $56, and $9,600. Okay. The long-term TANF, which is also known as welfare, that one is a 2-year credit that's up to $9,000. And then the food stamp category is $2,400. All the other categories are $2,400.
Okay. And how are they earning the credits at a time? It's by a certain amount of hours worked, or is it days worked?
That's correct. It's hours worked and wages earned. So once they get to 120 hours, you get 25% of their wages. Once they get to 400 hours, you get 40% of their wages.
Their wages. Okay, I saw that. Okay. And that's how.
And that's over a 1-year period of time.
Over a 1 year. Okay. With that.
So
now,
theoretically, let's talk about one of your. Let's say we have a resort, okay, and halfway through the summer, Jill quits and they hire Bobby. Bobby's eligible for tax credits. Okay, so let's say he works from July until September and then goes back to school. Okay, and then the following May rolls around and they bring him back. Okay, he can still earn credits from May through July. Okay.
Okay.
So it is revolving 365-day calendar.
Okay. Nope, that makes sense, and that's actually a good thing. Now, I'm just trying to put numbers together. So when we decide that, hey, we want to go forward and try to get the tax credit, we have to fill out the IRS form 8850. Is that correct?
No, The 8850 is what we submit every time someone's eligible.
Okay, and then who is submitting that? The owner of the business?
No, we submit that. We do all the work behind the scenes.
You're doing all the work behind the scenes. So once I'm the owner, I see that it's there, and I say I want to do it. I reach out to you, and you're going to charge me the $299, but you're going to submit that 8850 form for me, and we're good to go till the end of the year when the 5884 needs to be filed. Is that correct?
That is correct.
And during this whole time, because we're going through you, I'm seeing when my employee reaches the 140 hours, and at that point, it's coming up saying that I'm getting 25% of their salary, their gross salary wages. And at that point, when we know that, I can use that tax credit towards my quarterlies. Am I reading that right?
That is correct.
And then hopefully that person is staying longer and they hit that 400 hours, and that's when that's when you'll get 40% and max out on your credit for that employee.
That's correct.
Okay. And then we're saying the IRS Form 5884, does that have to be filled out by the CPA or accountant, or can the...
No. The employee themselves needs to fill out the 8850.
The 8850, the employee himself has to fill out.
Yes, and then the 5884 is what the CPA fills out when they're doing their taxes at the end of the year.
So does it have to be a CPA or an accountant filling out the 5884, or can the owner of the business fill that out?
They can fill it out, sure. If they don't use a CPA.
Okay, I'm just asking because, again, I think a lot of people brought it up. You're looking at $300 here up front, and then one person asked how much an accountant would charge you to pretty much put his signature almost on it, because you're filling out 99% of it for him, right?
That's right.
I'm just trying to see how it makes it work in there. Okay, well, thank you so much.
Sure.
I think the cheat sheet would be great.
Yeah, we'll definitely put that together and get that out to you.
And again, on that cheat sheet, I think the understanding the 140 hours and 25% and the 400 hours and then 40% really makes people understand. Because I think, I just heard in my team when they were talking about it, people were like, oh, yeah, I'm going out and telling them, oh, do you know about the WOTC credit? You can make $9,600.
Yeah, and that's not quite what it is.
Yes, you want to explain it, because you get these people going and then they're not happy because they don't understand that, hey, this money's coming out ahead of time. We didn't know anything about being able to use it against their quarterlies once it has been established. So thank you so much. It was a great hour. Thank you. I can't thank you enough.
Awesome. Well, thank you so much for your time and everyone for hanging on. If you have any questions after this point, please just email me since we are at time. But I really appreciate you being here.
Thank you.
Thanks.